Is she sharing her screen?
Go, Mary.
Yeah.
Okay. All right. Good evening, everyone. My name is Mary Marr. I'm one of the real estate advisors here with the Licata Group of EXP Realty. Thank you so much for joining us this evening for our first credit workshop. We're here with Stacy Barowich of Movement Mortgage and Jordan Goldberg, who's a senior account executive with Credit Plus. Jordan is the #1 credit expert for the mortgage industry. He's been in the mortgage and credit industry since 1993, and he has helped make home ownership possible for thousands of people. He has a wealth of knowledge. We're very excited to have the opportunity to learn from him this evening. So Jordan, if you want to go ahead and take it away, it's all yours.
Hey, awesome. All right. Thank you, Mary, and thank you all for being there. Thanks for putting this together. First big presentation of 2022, and we've got some great information for you tonight. For those of you that are interested in getting into the home buying process, credit is a huge piece of the pie, and we're going to talk a little bit about some things that impact credit, understanding your credit, understanding credit scores, some tips and advice, guidance, for things that can impact your credit score, and just make sure that when you're ready to pull the trigger and move forward and find that house that you want to make offers on, that you're have your credit in the best possible shape, qualify for the best possible loan and the lowest interest rates. So Stacy, you can go ahead and move forward, and we're pretty casual with this, so if you have questions, we can open it up. It's something you don't understand, something you're curious about on your credit, feel free, ask the questions, utilize chat, whatever's available, and we'll make sure that we answer your questions. This is a tough subject for a lot of people. It can be personal, it can be sometimes it could be embarrassing. Some people just don't understand it. But I can tell you, I've been doing this for a long time, almost 30 years, and it's not rocket science. There's really simple moves you can make, simple things you can do to ensure that you have great credit scores. It may not be an overnight process. There's no magic wand that we can wave and turn bad credit into good credit. It takes effort, it takes work, it takes time. But if you follow the steps, follow the action, follow the plan, you can achieve very high scores. In my experience, I've seen people go from scores in the mid 500s to the mid 600s, in 3 months' time. They could get into the 700 scores in 3 to 6 months' time. So, we'll be glad to share those tips and advice with you. One of the first slides that we want to talk about today is one of the most confusing things that I see happen to people out there with credit is there's different types of credit scores. It's not one score for everybody. It depends on the type of transaction you're doing. It depends on the lender you're working with. One of the good things to know is when you apply for a mortgage, every mortgage company has to use the same type of credit score. Right, so the field is even, it's level for everybody. So if you go from one mortgage lender to another to a bank, you apply for a mortgage, the scores are going to be, they're going to use the same type of score. Obviously, if information on your credit report changes, that can impact your score, and information can change pretty often, as we'll talk about later. But there's a very popular website out there that a lot of consumers use. Even myself, I use Credit Karma. It's been around for a long time. I don't fear using it. I feel I've never had an issue with it, with the website. I've been using it since they first launched it, and I've never had a problem with it. And I like to keep tabs on it because there's useful information on there. But at the end of the day, The Credit Karma score is not the same score that Stacy and the team at Movement Mortgage use or any other lender, right? Credit Karma uses a score that's called Vantage Score 3.0. For mortgages, we use a different type of score from a company called FICO. FICO stands for Fair Isaac and Company, and they've been around a lot longer than Vantage Score. But Vantage Score and FICO are the two most popular, the dominant credit score companies out there. So Credit Karma uses Vantage Score 3.0. Mortgage companies use what I call FICO 4. It's some companies call it FICO 2. It's a score that came out in 2004. All right, so that credit score is coming up on 18 years old. All right, going off to college there. It's old credit score, but we still use it. The big difference between the credit score that we use for mortgages and the credit score that you would see on Credit Karma has to do with collection accounts. The score on Credit Karma ignores paid collection accounts, right? That's huge, right? If you have a $50 medical collection, a lot of people don't think that that's a big deal. But if that popped up, on your credit report and you pulled credit for a mortgage, a $50 collection account could drop your mortgage credit score 100 points, right? You could drop from 700 to 600 just by having a $50 medical collection. So it's a huge, huge deal. Now, if you go and pay that medical collection and it's now zero balance, Credit Karma would ignore it and you would be, in the 700s. Whereas on the mortgage score, we still count it against you. Score, how is it determined? This is what I talked about earlier. Really what makes up the credit score? What moves should you be doing? If you'll notice this pie chart here, 65% of your credit score comes from two categories. The most important one is make your payments on time. All right, always make your payments on time. If you have a minimum payment, if it's $20, $50, whatever the case may be, please pay that on time before the due date. It's great if you could pay more on an account or pay the entire balance off every month, but always make sure you pay at least the minimum payment on time several days before the due date. 30% of your credit score is amounts owed. And specifically, we look at amounts owed on credit cards. We call it credit card utilization ratio. So we add up your credit limit on every credit card you have, and then we look at the balance you're carrying on every credit card, and then we come up with a percentage. The higher that percentage, the lower your credit score. So people always ask, where should my utilization ratio be? What percentage should I carry? Well, below 50% is good. Below 25% is better. To have maximum credit scores, you want to be below 10% of your credit limit, not zero, right? And we'll talk about that in a few more slides, and I'll explain what I mean by not zero. And you'll see the remaining 35% of your credit score comes from some smaller things, length of credit history, new credit, types of credit, right? So you'll notice inquiries are not included there, right? We didn't show inquiries as a big hit to your credit score. And that can fall into the new credit category, right? Because if you do open new credit, there's going to be an inquiry. But don't fear having your credit report pulled, right? A lot of times you read stuff that says, don't have your credit pulled, it'll drop your scores, right? And that's something that I tell people, don't worry about that. You've got to have your credit pulled if you want to apply for a mortgage or other type of loan. And we have special rules in place for inquiries for big ticket items like mortgages, student loans, and auto finance, so it doesn't damage your credit score. And so we talked about things that impact your score. Always make your payments on time. We talked about make the minimum payment due, set up auto pay. That's a great way if your online banking allows that or the creditor allows auto pay. Utilization ratio, we talked about that. Balances on credit cards in relation to your credit limit. The lower the ratio, the better. Okay, next slide, please. Right? It's better to keep a small balance than a zero balance. This is something that a lot of people struggle with and don't understand, right? You have to understand how credit reporting works. The simple rule is most creditors report to the credit bureaus once per month, right? When they generate your monthly statement is usually when they send information to the credit bureau. So if you have a statement, a credit card statement, that says you owe $200, right? And your credit limit is $2,000, you're at a 10% ratio on that account, which is very good for your credit score. If Stacy pulled credit she would see that information on the credit report. It would show that you owe $200. You could set up online banking to pay that account balance in full, pay the full $200 before the due date, right? You didn't pay any interest. You paid on time before the due date, and you showed a low balance on your credit report. Keep using that credit card. Maybe you charge $100, get another statement. It shows a $100 balance on your credit report. So always remember, typically the balance you see on the statement for your accounts each month is what we would see on your credit report. Even if you pay the balance in full, right? Don't think a zero balance is going to show on your credit report. That's not how credit reporting works. I mean, don't close accounts, right? Leave them open, use them for recurring bills, right? We all have cell phones, gym memberships, utility bills that we pay every month. Set it up to pay by your credit card, right? Maybe your gym membership is $50 a month or $100 a month. Pay that with a credit card. Maybe that'll be a super low balance on that credit card, low ratio, and then pay it off before the due date. And that takes care of the plan to maximize your scores, right? Use the credit reporting system to your advantage to max out your scores. Don't buy stuff you can't afford, right? Just because you have a credit card with a $5,000 credit limit, that doesn't mean go out to the store and buy a new TV, buy a new wardrobe, max out that credit card, and then make minimum payments on it. That's going to destroy your credit score, right? You have to use credit responsibly, right? Does applying for credit hurt my score, right? I talked about this a little bit. There's special rules for mortgages, auto finance, and student loans, right? In general, right? If you apply for a mortgage, today, and then tomorrow you apply with another mortgage company, and then the next day on Friday, you apply with another mortgage company. That's 3 mortgage inquiries in 3 days. Well, it only counts as 1 inquiry against your credit score because we allow for a 30 to 45 day window, depending on the type of transaction you're doing. All right, so don't be afraid to have your credit report pulled. A lot of times the same thing when you buy a car, people get all nervous. Oh man, the dealership pulled my credit, 5, 6, 10 times. Well, as long as it's in that 30 to 45 day window, it's not going to damage your credit score. You're allowed to shop around without fear of it damaging your score. Any questions coming up yet?
Anything from
Eight viewers, no questions.
No?
Okay.
Okay, nothing right now. Thanks.
And here's some stuff, some really important stuff, right? Because we run into this all the time. What do I do if I have something negative on my credit, right? A lot of people think about credit repair and stuff, and I really don't think credit repair is necessary. I don't ever refer anybody to credit repair. I think that you can do the same things that credit repair companies do, and you don't have to pay the fee for credit repair. They also cause issues with your credit down the road if you're applying for a mortgage, because a lot of credit repair companies just dispute negative items on your credit report, and then that can cause issues with your mortgage company and lender. So be very, very careful with that. If you're thinking about doing credit repair, you may want to talk to Stacy or another loan officer at Movement. But there's no real quick fix, for if you paid late on an account and it's legitimate, or you had a legitimate collection account, right, and it's on your credit report. One thing I do recommend all the time is if you have that $50 medical collection that we talked about before, and you decide to pay it, always negotiate with the collection company. You can call them up and say, hey, if I pay you, will you delete it from my credit report, right? We call it pay for deletion, right? And there are many collection companies out there that will agree right away. They'll say, okay, if you pay us, we'll delete it from your credit report. They don't care about your credit report. They don't care about what's on the credit report. They just want to get their collection account paid. So a lot of times they'll agree to delete it. Make sure you get a letter from them that says we instruct Equifax, TransUnion, Experian, the 3 bureaus, whoever they're reporting it to delete it from your credit report. So you have that just in case it stays on your credit. You can always show that to the bureaus, or you could actually give it to Stacy and her team and they can get it fixed for you. But just be careful with that. The other thing too is I recommend to a lot of people these days, if you had a late payment, maybe you paid one credit card or something late, maybe it was a mistake or something, reach out to them and just say, hey, I've been a customer of yours for 5 years or however long. I've never paid you late. Will you do me a favor and delete it from my credit report? It never hurts to ask. And especially in these times now with a lot of people affected by the pandemic and COVID and stuff like that, a lot of these creditors are sympathetic and they want to help you, and they'll be more willing to delete negative information, right? Ways to build credit if you have no credit history, right? We see this a lot, right? You have to be 18 to get your own credit card, right? So, now, our FICO score is turning 18, so I guess you could get a credit card now. But prior to being 18, how do you establish credit? How do you build credit on your own? You can become an authorized user, right? In my family, I have 3 of my kids are 18 or older, and all 3 of them are an authorized user on one of my credit cards. My son is still younger, so I haven't made him an authorized user yet, but when he gets older, I will, right? And that account reports on their credit report. So dad better make sure that I make the payments on time. I better keep a low balance on it, which I do, and it drives their score up. It's actually kind of neat because I monitor their credit, and my 3 daughters actually have a higher credit score than me, and they like to remind me of that all the time. Another way to get a credit card is a secured credit card, right? Sometimes that's the only type of credit you can get. That's where you would go to a bank or a creditor, and you may give them $200 or $300, and they deposit it into a bank account for you. And then they give you a credit card secured against your bank account with $300 in it. And you can make charges on it up to $300 and make payments just like a regular credit card. All right. So secured credit cards are a great way to build credit if you have no credit, or maybe you had a big event like a bankruptcy or a foreclosure and you're trying to reestablish credit. One thing to note about secured credit cards is you always want to seek them from reputable companies, the big companies that will report to all 3 bureaus. There's a website out there, I don't know if it's on this slide or not, but it's called Nerd Wallet. And I always refer people to that website, Nerd Wallet. And you can look up different types of credit cards, the best types of credit cards. And they have some great resources for secured credit cards that have low interest rates and report to all 3 bureaus. If you've been an authorized user, maybe you got a secured credit card, the next step would be to get a department store credit card, like a Kohl's credit card, or maybe a credit card from Dick's Sporting Goods or something like that. They don't have strict requirements to open up an account. Maybe if you have a score in the high 500s or low 600s, you can qualify for one of those types of accounts. And then after that, you keep building your credit, and you can get a bank credit card like a Chase or a Citibank or a Discover or American Express card. And I see this happen very quickly for people. You can go, in 1 year's time frame, you can go from having no credit and no credit scores to having a 720 credit score and several credit cards, right? You just have to follow the right moves of paying on time, keeping low balances, and using your credit. Number 4 there says having rental payments reported. There's a lot of companies out there like rentalverification.com. A lot of times it entails having your landlord or property manager has to sign up with the service, and then you can get your information reported. So it takes 2 parties, not only the tenant, but the landlord has to agree to report the information. But there's programs out there that can do that. One program that I do like to mention, it's not on the slide, but Experian has a program called Boost, and you may see them advertise. They do a lot of commercials, and you have to be careful with Boost because they talk about boosting your credit score and reporting, your utilities and accounts you pay through your bank account. But one thing that you have to be aware of is the Boost program from Experian does not impact a mortgage credit score. Our old, outdated version of credit score, for mortgages doesn't factor the Boost accounts in, whereas Credit Karma's score and some of these new types of credit scores, they will look at the Boost accounts and it will impact your score. But for Stacy and all the mortgage lenders out there, Boost does not help, boost a mortgage credit score. Sorry.
Okay.
Thanks, Jordan. That's a lot of information.
Yeah. We've got a couple of questions coming in here, and one of them I think you touched on a little bit. So we have a question: if you're starting from scratch, how long does it take to build a credit score?
Great question. All right. So if you open up a credit card, maybe you get added as an authorized user, or you open up a secured credit card. One thing you have to be careful is for mortgages, right? We have special requirements for the mortgage credit score, and we 2 requirements you have to meet is you have to have a 6-month credit history, and you have to have an account with activity in the last 6 months. So if you're a blank slate and you open up a credit card in January, right, 2022, and that's the only account on your credit report, it's going to be 6 or 7 months before you have mortgage credit scores, right? So a way to speed up the process is the authorized user account. Maybe a parent or somebody else will add you to their credit card as an authorized user. You want to make sure that the account has been open for a year or longer. The older the account, the better. Also, you want to make sure that the account has a clean payment history and a low balance, because you're going to inherit the history and the balance information on that account, and that will impact your credit score. So just blank slate, it could be 6 or 7 months when you open up a first account. You could speed it up with an authorized user account.
Okay, great. Let's see what else we have. I have a question here. If you usually pay off your credit card each month because you don't want to pay interest on a balance, does it raise your score if you only carry the balance for a month?
It depends on what the balance is, right? Remember, we talked about utilization ratio, right? And kudos, if you're paying off your balance in full every month, that's awesome. That's the goal for everybody on this meeting, on this workshop, right? I mean, I would love for everybody out there to be able to pay off the full balance on your credit cards every month. That's something I do. It's something I teach, in my family and everybody else. But always remember, it's the balance that impacts your score. So if you have a credit card with a $5,000 limit and you charge $2,500 on it, and you get a statement that says you owe $2,500, that's going to show up on your credit report, and then you're at a 50% utilization ratio.
Yeah.
So, you could pay that in full, right? But what's going to cycle through to the next month? How much did you charge the next month? One way to work the system is make more payments each month to the credit card company, right? So if you use a credit card a lot, like this is what I do. If I have high usage on my credit cards, I'll make payments every week to bring the balance down so that when they generate my statement, the balance is super low. That's one way to kind of game the system and keep your scores high and not worry about high balances reporting on your credit report.
Okay. And then the other one you've already addressed. Someone was asking if you should go through a credit repair company. So
yeah, I mean, sometimes that's the last resort. Like I said, I think sometimes there are cases, situations where it may be necessary. But at the end of the day, I feel like there's so much information out there online. You can go to myfico.com. You can go to the bureau websites, Equifax, TransUnion, Experian. You can dispute items directly yourself online. So paying for credit repair services, I just feel like you're wasting money. You'd be better off taking the money you pay the credit repair company and pay down the balances on your credit cards.
okay, great. Any other questions on credit or?
I have one for Jordan. Hey, Jordan, you can get your free credit report from annualreport.com free every year, correct?
Yeah, annualcreditreport.com. You can get a free copy of your credit report once a year. No credit scores. If you want credit scores, they'll charge you a fee, but you can get a free copy and see the information on your credit report, annualcreditreport.com. Another website I like is called Myfico.com. And the reason I recommend that website is you can buy your credit report and scores from myfico.com, and they're really neat because they'll show you this is your credit score for a mortgage, this is your credit score for an auto loan or a credit card. So they give you, I think it's 6 different types of credit scores, and it's they do charge a fee, but that's the only place besides having Stacy or another mortgage company pull your credit. That's the only other place where you can see what your mortgage credit score is.
I actually use that, myfico.com. So I have that one. So great. Thanks, Jordan. I really appreciate it. Mary, anything else?
Thanks for having me.
No, I don't think we have any other questions. Thank you so much, Jordan. That was great information. I know I learned a couple of things that I didn't know. So I hope everyone got a lot out of that. So Stacy is going to go over some of the first-time home buyer programs that are available, and what the credit requirements are, and who's eligible for these different programs. So Stacy,
take it away. This is just some general information, a kind of a snapshot of each program. If you need to get more in-depth information, we'll set up an appointment with Mary and the Licata team, and we can kind of walk through each scenario differently. So, but these are the first-time homebuyer programs and subsequent homebuyer programs. We have the FHA, we have a VA, a USDA, it's VHDA, now called Virginia Housing, and then conventional lending. These are the four major groups of lending that's all out there. So FHA is a financing by the government. It's a Federal Housing Administration Authority. It was my first home loan back in the day. So it's a really great program. It's got a lot of flexibility. The down payment requirement is low. It's 3.5%. You don't have to be a first-time home buyer, but most first-time home buyers find this. There's a lot of flexibility in this program. It is for only owner-occupied, meaning primary residence of the person that's on the loan that's going to be living there. Non-occupant co-borrowers are allowed. That means if you can't qualify by yourself, maybe mom or dad would like to co-sign for you, or if you have another family relative that is willing to co-sign for you on your behalf to help you qualify to get into the home. Although FHA allows slightly lower than 580 credit scores movement, I can only speak to us that we have a minimum credit score of 580. And if you've got any hiccups on your credit, it is 2 years from post bankruptcy, so 2 years from the discharge date. And if you had a foreclosure in the past, it's 3 years from the foreclosure or short sale. So that just kind of gives you a little snapshot. The next one is the VA loans, which is the financing government backed from the Veterans Affairs Department. You have had to be an active or retired military. You've had to have served for more than 81 days during peacetime, 90 days during wartime. National Guard and reservists are that have served at least 6 continuous years with honorable discharge. Unmarried surviving spouses, military who passed away during service, spouses of POWs and MIAs, primary residence only, again, and minimum credit score for a VA loan is 580. And the neat thing about VA is that there is a 0 down payment if you're eligible for the program. So they allow you to finance 100%. All right, for some reason it's not letting me. There we go. USDA RD loans. This is a rural housing development from the Department of Agriculture. It's primarily for residents in a rural area. Smaller towns or developments. We do have several of those in the listening area, believe it or not. Orange County happens to be a very big one. And Culpeper and parts of Fauquier. So just kind of giving you an idea. Again, it's a primary residence only. Borrower cannot own any other property and cannot exceed household incomes. They have really strict household income limits on this program, because it's mainly primarily for a rural housing development for lower income folks. The property must be located in a rural area, and they have a website where you can go and look it up. If you get a certain property and you're not sure if it's in there, there's a website you could actually just go and put the address in and it'll tell you. They have a minimum FICO score of 580 as well, and they have a 0 down payment requirement as well. So that's also a great opportunity. Virginia Housing. This is actually run by the state of Virginia. It's a wonderful down payment program. They actually allow for first-time home buyers or a person who's not occupied a home in the last 3 years or been on or owned ownership in 3 years. So there's a little couple separate. You could have bought an investment property 5 years ago, moved out 2 years after you had it, and you have not occupied that home in 3 years, but you're still on title. That is actually considered a first-time home buyer in the Virginia Housing Authority, or if you've just completely not been on title to a home in that time frame. It's for primary residence only, so it's owner occupied. And they offer, in this particular program, they offer a little plethora of all the programs. They offer FHA, VA, USDA, and conventional lending with their program, but they provide down payments assistance with those. So that's a pretty in-depth program. So if you're looking for information, that we'll get to that later. The minimum credit score for them is 620. So they do have a 620 credit score requirement. And then we're going to talk about the conventional financing, which is backed by the two major government sponsored entities, Fannie Mae and Freddie Mac. And those are your normal conventional loans. Any buyer can use conventional lending as long as they meet the guidelines. First-time home buyers, down payment requirement is as little as 3%. You can up to 20% depending on if you have the funds available. Minimum credit score is 620. Prior bankruptcy, 7 and 13 must be at least 2 years. 24 months for the dismissal for 13. Previous foreclosure, if you had a foreclosure, it has to be at least 7 years ago. If you had a deed in lieu of a foreclosure or a pre-foreclosure sale or a short sale, you must wait 4 to 7 years, depending on how much money you're willing to put down. So there are a lot of different options. And I know that Mary and the team there, if you're really interested in getting some more information about financing, reach out to Mary and the Licata Group, and they can get you in touch with me, and we can kind of set up some one-on-one, and I can give you more information about what particular program works for you. And that is it. Mary, do you have any questions?
Great. Let's see. Do we have any questions here? No. Okay. Not at this
Great.
time. So thank you so much, Stacy. And like Stacy said, everyone's situation is very different. So, even if you really don't think you're at a point where, whether it's your credit or your income or whatever your circumstances are, that you're not ready to buy a house now, it's never too soon to go ahead and schedule a consultation with us. We are happy to take you through the process and get you on the right track, even if you're a couple years out. There's certainly never any obligation once we've scheduled a consultation and met to talk about these things. We really are truly here to help and just answer any questions you have. So please don't hesitate to reach out or schedule a meeting with us just because you think, you're not ready at this time. So if you do have individual questions, because there's a lot of things, that can come up. All of this information was so helpful and it was great, but it's generalized. So if you have a specific situation or questions that are, specific to your situation, and you want us to reach out to you, if you want to put your email or your phone number in the comments or if you're not comfortable doing that, you can certainly send us a private message to our Facebook page. You can always email me, mary@licatagroup.com. And any of the advisors here are always happy to help. So our office number is 540-388-2541. You can call us anytime. And if we don't have any more questions, then Stacy, thank you so much. Jordan, if you're still there, thank you. We really appreciate you doing this for us. So much great information here. This is really, really helpful. So thank you.
Thank you, Mary. Have a good night.
All right. Thank you.
Bye,
Bye,
everybody.
everyone.